Hello, fellow traders. I've got some important information I want to share with you. It's called momentum busters. Why your trades lose and how to avoid them. Every time you make a trade, do you feel like you're trading into a brick wall? Do you feel like you want to bang your head into a brick wall out of frustration? Let's say you take a buy trade. Okay, price goes up initially in your favored direction. You're making a few pips, making some money. Then suddenly it happens again. It stalls and then reverses to go against you. Well, what happened? Why? You're frustrated, angry, and blame the broker for trading against you. Yes, you actually blame the broker. You think your broker's following your every move and even stopping you out when you expected price to continue moving in your direction. Well, guess what? You just got kicked in the butt by a momentum buster. Okay, traders, welcome. This is me. My name is Martin. I'm a proud Canadian trader. I've been producing these videos for a few years now and sharing lots of important information with you. I'm a professional trader, and I want to welcome all new subscribers from around the world. Thanks for tuning in. Also thanking you for sharing this video with other people, and hopefully I'm growing my channel. All of this helps give me some confidence to keep going and producing these videos, because I really want to help you guys. Now, this video is all about momentum busters. I'm going to teach you all about momentum busters and how they kick the crap out of you and cause you to lose all your money. Well, what are they? They're anything that blocks price from moving with momentum in your trade direction. They're invisible barriers that amateur traders can't see. Hey, a lot of experienced traders also fall into the trap of the momentum busters. So stay tuned, because I'm going to tell you all about them. A momentum buster is also something you do as a trader, kind of a cause and effect, which prevents your trade from moving into profits. Now, pay attention. Most of the time, it's your fault, not the market's fault. It's not the broker's fault. Another way to understand the phrase momentum busters is to ask yourself, well, why does price action slow down or reverse just after I enter a trade? First, understand that price needs momentum in order to move up and down into profit. If you want to know how to trade with momentum, I'm going to post a link on momentum trading just below this video, okay? Now, here, just quickly, before we go on to the momentum busters, take a look at this chart here. You can clearly see momentum, okay? Right here, you can see a reversal in price. Price comes down, then price goes up with a lot of momentum. How do we know it's momentum? Well, look at the angle and steepness of the incline here of how price is moving up. Also, take a look at these large candles, large bullish candles right here, okay? And then price comes down, okay, and then moves up again. Why does price move up? Well, take a look. Price did not close below this green moving average here. I use this as a base for my trading, and again, take a look at my video, my previous video on momentum trading. It'll give you more information on this and how to trade with momentum. But again, take a look. These large bullish white candles. Take a look. These small black bearish candles. See, the momentum is on the up trend here. There's very little momentum to the downside. Then all of a sudden, look at this huge candle from the dynamic support of the moving averages, and it just like a rocket, it shoots right up here. So you can see this entire move from here to here moved up with momentum. And then likewise to the downside, take a look. This whole area, price really moved with some nice big black. The black bearish candles are much bigger than the little white ones for the most part, and you can see price moves down nicely. So we have a bullish momentum here, and we have a bearish momentum, okay? Okay, guys, let's start here. Here are 10 momentum busters, all super important, and I wish I knew some of them when I first started, so I'm certainly glad to be sharing this with you. Here's number one. Okay, so OB and OS indicators don't work. What do we mean by OB and OS? Well, OB stands for overbought and oversold, and I'm sure most of you have used indicators such as the RSI or stochastics or other indicators to predict turning points, to predict the overbought and oversold areas of the chart of price movement. And take a look here. Here's the RSI here. It's the standard RSI with the and the two lines here. Right here is the overbought. This is the over bought, and this is the oversold area. So basically the way this works is when price is moving up and price wants to come back down right over here, okay, once this line, the RSI line, crosses the upper 70 here, this is the 70 level, then you want to sell, right? But what happens? Take a look. And why this indicator does not work? In fact, the RSI and the stochastics are not good indicators at all if you're going to predict the turning points in the market. I'm telling you right now, guys, they're not good. So don't use them. And here's an example. Just as you thought price is coming down, according to the textbook explanation and theory of how the RSI is supposed to work, price does not come down far enough and immediately goes back up again. You can see with this big white bullish candle. Here again, you can see whenever the RSI is supposed to cross from above to below this 70 line, you're supposed to take a sell trade. Again, according to theory, guys, it doesn't work. Okay, take a look what happens. Price continues going up. It comes down here a bit, okay, and then goes up, comes down a bit. So you can see the RSI is coming down. Then RSI rises here again. Price starts to go on, making a higher high to the previous high. Price goes up. Let me just, actually I should be using my drawing tool. So price is going up again, and take a look. Price goes up, and then all of a sudden you may see this one big black bearish candle, thinking that, aha, finally price is going to come down. You take a look at the RSI below your chart, and guess what? Right there, the RSI crosses down below the 70 level. This is the 70 level, and guess what? Just as you took a sell trade, price goes right back up again, and most likely stopping you out, and another losing trade. So here's one example. Here is another, and another right there. Every time it crossed over, it failed. So this is a great example why this indicator does not work, guys. Let me just take that off. And let's take a look here. If I have another example, just a second here. Okay, no, I don't. But anyways, it's just a quick example. Sometimes it works. I mean, you know, sometimes it works, and when it works just like any other indicators. But often it doesn't, and so it's not your fault. The indicator is not highly accurate. I would discard it from your toolbox, guys. Okay, so let's go on. Number 2, guys. Number 2, taking breakout trades. Okay, so take a look at the chart. Let me get my drawing tool. Price is going up, you can see right here, and then price coming back down. Okay, price coming back down, and now you see this. This is I've drawn this in here is a support level. Perhaps you're a little bit more technical advanced. You've drawn this ahead of time, or you see this on your chart, and you see a price right here breaking out below support. Now you want to take a sell trade, right? So you want to take a sell trade right about there, and guess what? The moment you take a sell trade, it reverses again. You see it reversed right here, and then just goes sideways, and then finally takes off up higher again. So again, another losing trade. So that's a breakout trade, okay? And again, one of the best things you can do whenever you think price is going to be breaking let's say below support or above resistance, what you should do is wait and see if the price breaks out. If it does, then wait for a retest for it to come back to retest the support or resistance line that it broke through. So basically you want to take a breakout. You don't want to take the breakout. You want to wait and just take a look and see if it actually breaks out or it comes back. In this case, it came back, and guys, this is called a false breakout. So that is number 2. That's the number 2 momentum buster. Okay, so moving right along, then we go to number 3. Oh, I've got another, before I do that, I've got another example here, breakout trade. So you can see here, just use my drawing tool. Here's a false breakout. Here's a false breakout, and here's a false breakout. Okay, you can see that. So 3 false breakouts every time it went up. Okay, and so that's why I talk about waiting for a trade to break, in this case support, go back to test it, and if it would have tested it and bounced lower again, then you could get in a continuation to the downside. Same here and same here. That so the retest did not happen. In fact, price went back up above the false breakout here. So just beware of that, guys. That's number 2. Taking breakout trades. Sometimes you should have just a little bit more patience. Or look at a higher time frame. Sometimes you find on the higher time frame it actually does not break lower, and you really should have been waiting for an opposite trade to the upside in this case, as an example. Okay, so let me just take that off, and let me continue here. Okay, number 3, trading against the flow. There's another momentum buster. Okay, let's take a look here, guys. Let me get my drawing tool again. Price is going up, okay, and then comes back down a little bit. Now, this is called a retracement or a pullback. Price goes up again, okay. You can see the trend is pretty strong here. The angle of price rising is pretty strong. There's a good angle. It's at least minimum 45 degrees, and I discussed this in my previous momentum video, okay. Trading with momentum. So again, take a look at that, guys. The link will be posted at the bottom of the video. Now here's a bit of a pullback. It goes up higher again. So you see, this is what amateurs do. Instead of trading with the trend, with the overall market flow, okay, you want to always trade with the dominant flow, okay. Amateur traders look to trade the pullbacks or the retracements. They want to take a sell trade here, and every time they do, guess what? It goes up higher, and you keep losing one trade after another. Okay, so even here, here's a kind of a breakout pattern. Price comes down, and you want to take a sell trade, and guess what? Immediately goes up higher. And this is the dominant trend, guys. So if the dominant overall trend, especially on a higher time frame, is up, you want to trade bullish. Okay, you want to take long trades. If the overall trend is down or bearish, then you want to take short trades or sell trades. Okay, so pay attention to this one. This is a really important one. Momentum buster number 3. Okay, now we get to another momentum buster, number 4. Buying, selling near support and resistance. Okay, now this is a big one because I did this mistake as well in my early days in some cases, and you can see, let me get my drawing tool. Price is coming down, okay, and you see this is, I've drawn this in here already for you. This is support, this is resistance, guys. Okay, so support, resistance, and they're not on your charts. You have to either draw them in yourself or understand what support and resistance are for you to understand how price flows, right? Price usually moves up and down in price cycles, up to a resistance, comes back down, hits a support area, and bounces back up, and it goes up, down, up, and so on before breaking through again. Okay, and so here You can see inexperienced trader. You may fall in that category. You may take a look. It's coming down pretty hard. We got a lot of black candles here, and you may be taking a sell trade right as price breaks. And guess what? Again, a reversal, right? So you're selling, or you may be selling even before this area, thinking that price is going to go through. So this is called selling into support. That's a big no-no. You don't want to do that. On the other side, price is going up. See these large white candles? So you're thinking for sure price is going to go higher. Right above this candle, you're looking to take a buy trade. You enter a buy trade, and guess what? It goes up right there, and you hold on to the trade, and all of a sudden, look at that. The next candle is huge, huge. Couple of huge candles to the downside, and so this is another thing that is a momentum buster that's going to kick the crap out of you and help you lose a lot of money. It's called buying into resistance. Again, that's a big no-no. Okay, you don't want to buy into resistance, and you don't want to sell into support. Okay, now also these levels, pay attention to the big psychological numbers, like a level with all the zeros behind, like the 1300 level, 1400 level, 1500. So there often are there, the banks will purposely move price down, give you a false breakout before moving back up again. So again, remember, false breakouts and buying into resistance or selling into support are no-nos. They are momentum busters, okay? Now, number 5, guys, are you trigger happy? And I know I've done that. Everybody's done that, and I know you've done that, right? Now, what does that mean, trigger happy? Okay, that's not waiting for your candle, your present candle that you're watching, to close entirely. Now, isn't it amazing how often a candle you're watching changes its mind and reverses just after you enter a new trade, before waiting for it to close? Try to acquire more patience, guys, in your trading to help you stop guessing what will happen next. Now, I want you to take a look at this big candle right here. Let me get my drawing tool again. Okay, so price has gone up. You're pretty confident price is going up, okay? And maybe you've been placing a couple of buy orders, but right above here, you place, you're watching this candle, but you have to understand a little bit how candles work. Now, let me take that off so you can see this clearly. You see this? We had 3 bullish white candles in a row, then we had a black candle. So you're thinking that, you're thinking that you want to take a sell trade because you have a black bearish candle. Now you're guessing, right? You're guessing. You're saying, well, price has gone up and up and up, and it can't go up forever, so it's got to come down. Yeah, you're right about that. Price has got to come down, but when is the big question? And then here, after this big black candle, and this is how price works, guys. So price opened right here, okay, after this black candle on this candle. Price opened here, went all the way down, okay, and as price is moving down, you're thinking, price is now certainly moving down, and you get in below this black candle, or you've placed a pending sell stop order below the black candle right here, right about there, watching price go down. You're making some money, that's good, you're excited, price is dropping, but then all of a sudden, let me take that off, all of a sudden price retraces all the way up, and guess what? It ends up, when the candle finally closes, it ends up being a white bullish candle. And guess what? If you got in here, let's say, and you probably had a stop loss here, you are certainly stopped out. And guess what? You've lost money again, and again you're blaming somebody, right? You're blaming somebody else, maybe the broker, maybe, I don't know, whatever. But the point is, you made a bad decision because why again? The overall market is an uptrend, and in an overall, if the dominant trend is uptrend, only take buy trades, don't take sell trades. So in this case, this is an example of being trigger happy, and you didn't wait for this candle to close fully to give you a more informed decision-making process. Okay, so just keep that in mind. Okay, let me just take that off, and let's get on to number 7, I believe. Let's take a look. Oh, number 6. Sorry, number 6. News announcements. Now, this is super important. You place a trade just before minor or major news announcements, right? They come out all the time, and the markets can go crazy. There could be movements of 50 to 100 pips in just a matter of minutes. The markets are often quiet before a major news event, so please understand that. Before a major news event, let's say like the non-farm payroll, the markets are pretty quiet, and you want to place a trade, and you want to guess that price is maybe going to go higher. But guess what? News comes out and price goes the opposite way completely, and you may be 80, 90 pips in a hole before you know it, so you've lost money again. So that's a big momentum buster, news announcements. Don't place trades before a news announcement. Also, trading news events is very difficult for seasoned pros, right? Your chances are 50-50, and with a big news announcement, you could find price and your sanity in a very deep hole quickly. Okay, so stay away from trading news announcements. It's a really bad momentum buster. Now, next one is number 7. And low volatility pairs. Now this is important. You may just be choosing the wrong currency pairs to trade. There are really high volatility currency pairs, and they're very low volatility. And there is information you go to on the internet. I'm actually going to post another link below the video on this website, and you can click on this and it'll show you all the different currency pairs. You can see that right here, all the different currency pairs, and you can find out which ones are high volatility and low volatility. So taking a look here just to show you in pips. See this right here, the British pound, Australian dollar right here. Okay. It's 187 pips on average. Now, take a look up here. You can put in your numbers. This is for the last 4 weeks. So this is the daily average. So on every day, if you want to trade this pair, you can see it's moving on the average. The average daily range is 187 pips. Right now, this one, British pound CAD, this is 202 pips. That's a huge volatility. If you look at the common Euro USD, here's the Euro USD right there. You can see right now it is the volatility is very low. You're not going to make a lot of money by trading a currency pair with low volatility. This one on an average daily basis right now, it's only making about 59 pips, okay? And this is in the last 4 weeks. This is pretty current, guys, because I'm just producing this video on March the, I think it's March the 16th here. Okay, so just letting you know, and you can change the parameters of this and take a look and find all your high and low volatility. So right now, for the last few weeks, the British pound has been very, very strong. And again, if you want to make some money and you want to make some really good pips, then choose a currency pair that's moving, not standing still. Okay, a lot of the major pairs right now are standing still. It's the cross pairs that are moving that are your best bet. Okay, now we get to number 8. This is important. I didn't even really notice right at the beginning, but slow market timing. So again, there's information on a website you can go to get this information. And on my last chart, again, let me just go back here. I showed you the British pound Australian dollar, right? That's on the average 187 pips a day, which is pretty darn good, right? Now, it can give you more information to show you the time of the day where you can make all these pips. And you can see here the chart on the axis on the left. It says from 0, 10, 20, 30, 40, 50. This is the amount of pips per hour, right, per hour, and you can see 50, 60 pips on an hourly basis right here. And then the best days for trading this particular British pound Australian dollar here is Wednesday. So Tuesday and Wednesday and Thursday for this particular pair is really excellent. So it's market timing, guys. Sometimes you're running into a momentum buster where the market is very slow. You may be trading right in the evening, and let's say, especially if you're on a you're doing some intraday trading or scalping, the markets just aren't moving for you. Well, here's the reason why, guys. So take a look at this information. Again, the link will be posted below the video. Okay, now 9, you're not reading candlesticks. Now this is super important. Okay, as price is moving, you have to understand that you have to understand market structure when the bulls or the bears are losing control, right? So price, we've already said this before, price cannot move up forever, right? At some point it has to stall, go sideways or reverse. But take a look at the individual candles. It'll tell you when there's very little momentum. Here you can see there's strong momentum with this kind of very large sized bodied candle. When the body of the candle gets smaller, always let that be a caution to you where price may stall or even reverse. And on the downside, you can see right here as well, right? So that's really, really important. And right over here, take a look at this, guys. Really, you might want to pause the video and take a look. The strongest candles for the bullish candles right here are when you see bodies like this with very little wicks. When you see bodies like this, they become weaker and weaker and weaker. So this is the weakest bullish candle. This is the strongest bearish candle. This is the weakest bearish candle. This is a fantastic graphic to show you and help you understand how, when you're watching price move in your charts, always note of the actual candle bodies and the wicks. The wicks are very important. The bigger the wick, the more possibility of price stalling or reversing. Okay, so moving right along, we are at number 10. Market cycles are out of sync. Now, this is probably one of the biggest momentum busters out there. Guys, you're all making these mistakes, okay? You're getting in, you're taking trades when you shouldn't be taking trades, and that's most likely because on the chart that you're using, you're not following the overall dominant trend or market sentiment of the higher time frame. So here's an example of what I mean by your market cycle is out of sync. Okay, take a look at this chart, guys. Okay, I'm going to use my drawing tool. So we have a previous trend. It's going up. You can see with this green arrow. Okay, price goes up. And I've drawn in this rectangle, it's support. Okay, so price comes up, tests support, bounces higher again, tests support, bounces, going sideways, tests support. Okay, and take a look. And finally, you're saying to yourself, well, sooner or later, it's got to break support, right? So you get into a trade after this big black candle. You enter a sell trade right there, guys. This is on a lower time frame. This is the British pound, Japanese yen chart. But let's see really what went wrong. So I'm telling you the end of the story here. You're going to lose this trade, even though it looks great on this time frame, right? But what went wrong? Okay, let's take a look. The next higher time frame. Okay, so I've now zoomed out a bit, shown you more price on the chart, and you can see right here, guys, this is where you went wrong. You actually took a sell trade right here, okay? Price went down a little bit, but then guess what? The next candle right here, it just reversed, and guess what? Continued going all the way up. And this is another losing trade because you did not switch your charts to a larger time frame to see if that aligns with your lower time frame chart that you're trading on. So this is the same chart, guys. I just zoomed out so that you can see more candles. This is the British pound, Japanese yen on a higher time frame. The overall trend, guys, is up, bullish. So instead of taking a sell trade, you should have been taking a buy trade, guys. And that is an important lesson because you obviously have lost money and you're crying the blues. So that kind of wraps it up. Hopefully you've gained a lot of information in this video. And again, cheers to everyone. Thanks for watching this video. Please don't forget to subscribe. Click on the like and comment buttons. Send me some comments as well below the video. And take care, everyone. I really appreciate everyone watching, and we'll see you again next week.